How's it going, everyone? Brian Hoops here with Midwest Market Solutions. Our closing Market Insider TV comments. It is Thursday, December the 7th. Thanks for joining us. Let's look first at the cattle market in here. This was a support line we had drawn last night in our commentaries. We closed below it today, and you can see this is the blue line here is a seasonal downward bias for this market, and this lasts till about the 13th, so another week of some downward pressure. Our target on the downside here is this 116.30 area. That represents this next support, and that's about a $2.30 move or so to the downside in here. If you want to use some Fibonacci numbers, let's do that. Let's project where this market may go. This move here, 118.52, and then down to this 116 area, and that's probably the extreme move that we're going to see off of this move lower. So I really think when you get into this area, that's going to be the low here. I wish I could say that would be the low for the year, but I was hoping we get some sort of a bounce here today or even tomorrow on some hedge lifting, but we did have cash trade developed today in the Southern Plains, and zero in the way of any hedge lifting to speak of. 62-cent lower close in the February cash trade at 117 in Kansas and Texas. Northern trade about the same on a live basis, dressed at 187 to 188. Both of those figures are sharply below last week's levels. We're entering into a period, as we flip to the feeder cattle chart here, entering in a period where not only do we have seasonal weakness, but packers can use the next couple of holiday weeks to kind of leverage the cash markets lower. They don't need to buy as many supplies, and when we have big supplies like we have of cattle and hogs coming at the market, that usually means much weaker cash markets. So hogs down today as well, 40 cents. This was our initial support right in here, 68.25, and then a little bit longer term support, 66.30. Again, hogs, seasonal period of weakness. This lasts till about the 20th of the month before we start to see some sort of recovery, and I think that's real likely. It was a down day in the soybeans and the grains for that matter. Here's our double top resistance we talk about as we do some interviews with different radio stations, networks, and that sort of thing. Talk about this double top on the charts at around 10.14.5, 10.15. We pulled back from there. This is the next area of support right down in here, 9.85. That's where I think we're going to target before we see some sort of a move back higher. The meal, kind of the same thing. We're going to pull back, I think, to the 331.80 area and then take another shot back to the upside. The weather forecast in Argentina, really still dry, still warm into the end of the month. So I think we'll see some strength after we see this initial round of some profit taking. Corn will have support, 349.5 area. That's this double bottom support. It was drugged lower today by poor exports, but also look at this wheat, new contract lows here in Chicago, Kansas City, very much similar chart pattern, new contract lows, as we just have too much supply and not enough demand for corn and for the wheat products at this time. All right, if you have any questions, contact any of our offices. They'd be glad to assist you. Brian Hoops, Market Insider TV, closing comments on Thursday, December the 7th. Have a good night. Talk to you again later.